Good morning, everyone. Well, yesterday's slight fall in euro-dollar is really quite conspicuous against the background of a generally weaker dollar. With so many ECB officials talking about the possibility of negative interest rates and even quantitative easing, the market's starting to realize the diverging policies between the ECB and the Fed, and it's discounting at least further talk about loosening at the ECB meeting next week. In that context, today's announcement of Germany's preliminary CPI for March will be closely watched as an indicator of Monday's Eurozone CPI data. German inflation is forecast to have slowed to 0.9% year-on-year from 1% year-on-year in February. The year-on-year rate of Eurozone inflation has moved in the same direction as German inflation 73% of the time over the last 5 years, so the odds are good that Monday's announcement of Eurozone inflation will show that it's slowed a bit in March too. Also, comments today from ECB Governing Council members Visco and Weidmann will be closely watched ahead of next week's meeting. The market will particularly want to hear if Weidmann expands on his recent statements about the possibility of using negative interest rates to prevent the euro from appreciating. The other big theme in the market is the recovery in emerging market currencies. The Brazilian real led the way yesterday with a stunning gain of nearly 2%, despite the recent downgrade of the country. Investors are apparently re-entering carry trades, maybe with the euro as the funding currency, as confidence and risk appetite return. The crisis in Ukraine has apparently stabilized and doesn't seem to be leading any further, while Chinese equities have recovered somewhat from their lows of last Thursday, leading to increased confidence in the asset class of emerging market assets. Apparently, the FOMC shock has waned and the search for yield continues. The Turkish lira, the Russian ruble, and the South African rand are among the highest yielding currencies that retail clients can access. Risk takers might want to consider looking at those, although personally, I expect the ruble to be quite vulnerable to capital outflows in the future. So what else do we have coming out today? The third quarter estimate of UK GDP isn't likely to shake the market up. U.S. personal income and spending for February are coming out. An expected slowdown in spending could be dollar negative. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Global Head of FX Strategy at IronFX Global, wishing you solid trading.